Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 6th of August. Starting off with the FTSE 100, where it's been a rather volatile couple of weeks, rallying to 8,400 and then declining towards 7,900. We missed the 200-day moving average, 78.50, and also that April support line projection, which was our worst case scenario, which I suppose is good in a way, but we found resistance at the old support line there, 80.60, and while we're below that on an end-of-day close basis, we still have the risk of a retest of the 200-day line area. Remember, that normally becomes a magnet for the price action in such situations. End-of-day close above 80.60, and we're looking for 8,200 again, and the area of the 50-day moving average, but quite, as I said, a volatile market there at the moment. Moving on to the DAX, and here, this was the market that warned us that there was a problem, and it did that on Friday with the gap down, and we've had another gap down yesterday as well. What's interesting at the moment, or maybe concerning, is that we're still below the floor of the gap there, around 17,500. We actually went through the 200-day line, so expecting that as a possible for the FTSE. And while we're below the 17,500 area, looking for a potential retest of 17,000 and the old February support zone. Only back above 17,500 takes us back to that broken support line projection of 17,800. RSI at 31, we bounced off the oversold area, so normally that has been, at least in the recent past, the area that the DAX will find its support. Moving on to the Dow, and here we had the big gap down there, and the potential here still for a test of the 200-day line, 38,000, while we're below the 50-day line there at 39,500. Broke out of that rising trend channel as well, so that 200-day line area, basically post-April support for this market, a threat at the moment. RSI at 35, so that suggests maybe 1 day away from the potential rebound for that market. Moving on to Bitcoin, which has also been in the wars, and here you can see that we hit our support line projection there. It's 52,000. We had a bit of a fall through 50,000 as well, but the nightmare scenario of heading down to 42,000 still on hold at the moment. While we're above 52,000, then looking for this market to rally back to the floor of the old rising trend channel there at 58,000, and only really back above that means that we're back in business for this market. On to gold, and here, this market also falling. It's supposed to be a market which thrives on risk, but also people have taken profits here as well. 2450, the magic number there. Below that, then there's the risk of a move down to the floor of the channel there, 2380. That channel there from back in December. So it looks like a bull trap there through 2490, and we should be wary of a test of that 50-day line while there's no end-of-day close back above that. Onto the stocks, and starting off with Anglo Asian, where you can see that this market hit our target there at the top of that rising trend channel from this time last year at 94 pence. End-of-day close above 94, and we could be looking for a new leg higher, as high as £1.17 by the end of next month. Ideally, we stay above the floor of the latest gap at 84 pence on an end-of-day close basis. You can see that extended uptrend line in the RSI window also helping the cause, as is the rising 50 and 200-day moving averages. On to Bushveld, which has given us plenty of false dawns in the past, especially over the May to July period, but having another go now, and just the possibility we've got a rising trend channel base there, and at the floor of the channel is around the 0.5 pence level. Above that, looking for the top of the channel there at 1 pence by the end of next month, but I have to say that is a best case scenario target. Although saying that, we have seen the shares jump quite sharply, and therefore it could do that rather more quickly than by the end of next month. On to Destiny, and here the shares delivering a rebound within a broadening triangle base. Here we've gapped up today, which means that we've got a bear trap island reversal, so gapping down to new lows and then gapping up. That tends to be a very strong signal. Looking for the shares to at least fill the gap up to 8.6 pence and hit the 50-day line. Best case is that we head up to 13 pence by the end of next month. Ideally, there's no end-of-day close back below the floor of the gap there at 4.3 pence, and we can also add in the bullish divergence with the lower lows for August but higher RSI trace. So pretty positive setup there, and obviously the share's already up 41%. On to a stock which doesn't have much charting data, but here we have the hourly chart of Georgina. Here we've got a rising trend channel from basically the end of last month. For the channel there at 17 pence, and above that we're looking for 21 pence plus by the end of this month. Ideally we don't go back below that 50-day line, which is effectively a trading stop loss for the bulls at the moment. That's just below 16 pence. Back to the normal charts on SharePad, and going on to Goldstone, where we're hoping that the shares will remain within a rising trend channel, quite a steep one, maybe too steep to be sustained, but at the moment we've got a May rising trend channel, the base of the channel there at 1.4 pence. Above that we're looking for up to 2.8 pence, perhaps by the end of next month. Big barrier there at the 200-day line, 1.8, so that might be an initial target, and we certainly do want to see the shares back below the rising 50-day line. Currently around 1.1 pence, but bounced off RSI 50 twice in the recent past, so looking quite healthy in the wake of today's update. On to Helium 1, where we are still within this rising trend channel. I don't think that there's any new helium news, but or there's no helium found yet, but we've deepened the well. Here we've got a rising trend channel from June, top of the channel there as high as 2.1 pence, which we're looking for perhaps now by the end of next month, and the upside bounded while we stay above the 50-day line at 1.1 pence. Nice bounce off RSI 50, so that does suggest that we are making progress. The only problem here is that we've got quite a few candles there where the high of the day was 1.5 pence, so if you're cautious you might wait for an end of day close above that before targeting 2 pence plus. On to Kavango, where I've updated the chart. We've got a rising trend channel here from back in November. Floor of the channel level with the 50-day moving average at 1.4 pence, and above that looking for up to 2 pence by the end of next month or even sooner. There is a line of resistance there from May, and that needs to be broken around 1.5 pence to give us a new leg higher. Onto Mosman, which has bounced well off the floor of that rising trend channel and also broken the high of Friday around 0.06. Above that, we're still looking for the top of the rising trend channel there from back in March as high as 0.1 pence, and ideally we stay on the right side of 0.5 pence in the floor of that channel. In the meantime, RSI is pushed above neutral 50 as well to 54, and that is helpful. Onto Metro, which is a bit of a strange one at the moment. Here we've got what looks like a mid-move consolidation, so we're up from around the 35 pence area to the 57 pence area, so 22 pence, and then looking for 22 pence at least above the 50 pence support that we've had recently, so that takes us into the 70s. Top of the channel there, which is obviously a guess, up to 85 pence by the end of next month, while we remain above the 50 pence level. On to Shield, which I've looked at quite a few times in the recent past. Here a nice uptick there, finding support at basically above old resistance around the 2.5 pence area. The longer we stay above 2.5, the greater the chance of a move to 4 pence and taking out that 200-day moving average, which has been the block since back in September. And as I say, it normally tends to be a magnet on the price action for however short a time that is. Trinity is next, and here decent price action. We've already hit our initial target there at the top of that channel at 61 pence, looking for 65 pence perhaps by the end of this month, while we remain above the latest support area at 55 pence. Finishing off with YouGov, and here the excitement is that we've had a bear trap island reversal, so gapping down back in June and gapping up now above the neckline resistance there at £4.80. We're looking for up to £6.50, which is the top of that June rising trend channel. But the key here, staying above the old £4.85 or 80 to 85 resistance zone. That's it for me today. More updates tomorrow.